Right now, Nuburu, ticker BURU, is trading at $0.395, and it is absolutely on fire this morning. The stock is up 14.66%, a jump of 5 cents on the session, and it's doing this on extremely heavy volume. We're only a few minutes into the trading day, and over 10.6 million shares have already changed hands. The stock rocketed out of the gate from its open of $0.3241, hit a high of $0.4313, and is now settled just under that 40-cent mark. This is precisely the kind of move that lights up scanners and trading apps like Robinhood and SoFi, drawing in anyone looking for quick momentum. The expectation is simple. Here is a high-tech blue laser company, a penny stock with a compelling story, finally getting the market's attention. But the reality of why it's moving is far more complex and, frankly, far more desperate than just a new laser contract. This isn't a story about a technology finally finding its market. It's the story of a company that is radically transforming itself to survive, pivoting entirely away from its original business model into one of the most competitive sectors on Earth, defense and security. What most investors, especially those new to the name, believe about Nuburu is rooted in its fascinating original technology. The common ground narrative is that BURU is an industrial laser company. They developed a groundbreaking high-power blue laser. The core physics here are a genuine advantage. Metals like copper, aluminum, and gold, which are notoriously difficult for traditional infrared lasers to work with because they're so reflective, just happen to absorb blue light exceptionally well. This makes Nuburu's technology, in theory, a perfect solution for the modern industrial world. Think about the e-mobility boom, the Tesla stock story, and the massive global build-out of battery gigafactories. These factories need to weld billions of copper and aluminum foils and connectors inside battery packs. Nuburu's blue laser promised faster, cleaner, spatter-free welds, which should have made it an essential supplier for the entire EV and electronics packaging industry. That's the expectation. A high-growth picks and shovels play on the electrification of everything. It's the kind of story that gets investors excited about finding the next NVIDIA stock before it becomes a mega-cap giant. A story that seems perfect for a long-term Fidelity or Schwab Intelligent Portfolios account. But that expectation has collided with a brutal reality. The challenge from the BURU is that this brilliant technology never translated into a viable business. The financial picture here is not just weak, it is dire. As of their last major quarterly report for the period ending June 30th, 2025, the company's revenue had effectively collapsed to almost zero. We're talking about quarterly revenue of just $9,300. That's not a typo. In that same quarter, the company posted a net loss of over $12.2 million. The balance sheet tells an even frightening story. Total assets had fallen to just $2.48 million, while total liabilities had ballooned to over $47.75 million. This leaves Nuburu with a staggering negative total equity of minus $44.75 million. Perhaps most alarming was the cash position. At the end of that quarter, the company had just $111,090 in cash and short-term investments. That is not enough to run a household, let alone a publicly traded advanced technology firm. This is not a company experiencing growing pains. This is a company that was on the brink of complete failure. So this brings us to the recent stock movement and the real story. The 14% surge today and the mind-blowing volatility we've seen over the last few weeks, including a 7-day streak in early October that saw the stock gain 283%, has nothing to do with selling blue lasers to battery manufacturers. It is all being driven by a radical bet-the-company pivot. Management, seeing the writing on the wall, has decided to completely change the company's identity. Nuburu is no longer an industrial laser company. It is now, effective almost immediately, a defense, security, and drone technology company. This transformation is being executed through a rapid series of acquisitions and strategic alliances. First, the company announced it was acquiring Orbit SRL, an Italian software-as-a-service or SaaS company that specializes in operational resilience solutions for the defense and security sectors. The goal here is to bolt on a source of recurring software revenue, something its hardware business completely failed to generate. Second, and this is the big catalyst from just 5 days ago on October 22nd, Nuburu announced a strategic alliance with Maddox Defense to form a new joint venture. This JV will focus on next-gen drone technologies. The company has also created a new entity called Nuburu Defense LLC and has been implementing a new dual CEO structure to manage this complex new direction. This is what's driving the insane trading volume. On October 22nd, the day of the drone news, the stock traded an almost unbelievable 420 million shares. This isn't Fidelity Investments or other large institutions building a long-term position. In fact, institutional ownership is almost non-existent, sitting at less than 1%. The only significant institutional holders are Vanguard and Fidelity mutual funds, and that's only because their extended market index funds are forced to buy the stock. There is no smart money here validating this pivot. This is pure, high-velocity speculation from retail traders and high-frequency algorithms, all gambling on these press releases. Many of these traders are likely using platforms like Interactive Brokers for direct market access, or the Robinhood app for its simplicity, chasing the headlines of drones and SaaS and defense. The stock's recent activity has been so erratic that it even received a warning letter from the NYSE American Exchange for non-compliance with disclosure rules, a major red flag for any public company. While Nuburu claims to have resolved this administrative issue, it just highlights the chaotic environment surrounding this name. This is not Apple stock. It's a microcap fighting for its life. This company is pivoting from EV battery tech to military drones. Comment below, do you think this desperate pivot to defense will save Nuburu, or is this a last-ditch effort before bankruptcy?